Nigeria's equities market rose further by 1.21% on Thursday, pushing the market's benchmark performance indicator, All-Share Index, ASI, above 74,000 mark. This is just a day after the All-Share Index crossed 73,000. The market capitalization of the Nigerian Exchange Limited also crossed the 40 trillion naira mark at the close of trading on Wednesday. This comes 10 months after the market cap hit 30 trillion naira on the back of the interest of domestic investors. This has earned the local boss the enviable position of one of the biggest gainers from the reforms implemented by the President Bola Tinubu administration. Joining me to unpack this is Muktar Mohammed, the CEO at Asheer Dynamic Solutions. Thank you, Muktar, for joining me today.
Thank you for having me, Perpetual, and compliment of the seasons.
I wish you the same. Now, the equities market opened this year with its all-share index and equities capitalization at 51,251.06 points and 207.915 trillion respectively. But that has now risen, or they have now risen to over 74,000 points and over 40 trillion respectively. Talk to us about the factors that are responsible for this.
Yeah, Perpetual, you see, we are all smiling. I mean, if there's any reform that has worked, I think the only reforms that Tinubu administration have done that has worked is the reform that he has done that have affected the capital market.
Well, when you say it has worked, some persons might want to argue because we also need to look at the real sector. We'll be coming to that conversation right here.
Yeah, that's what I'm going to. I say when you say if there's any reform that has worked, I mean is the reform of the equity that have affected the equity market.
Exactly, I like that caveat.
The only positivity is in the equity market as it stands now. The whole idea why this has happened is just because of the reforms, and these are two major reforms that have driven the equity market: the floating of the naira and also the removal of fuel subsidies. So those are the two reforms. The floating of the naira help the bank balance sheet, raising violation for the bank's assets, and also liquidity ratios on the banks went up because of the dollar revaluation of their assets in dollars. And also for the oil and gas sector, that was also positive because it created positivity around that space because people just feel that you have more players and now it's going to be private sector driven. It's not going to be market. It's going to be market determined price. And also it's not going to be government prices, fixed price. So that also helped in driving that sector. Those are the two that policy that have helped the market to where it is today. But again, as you see the positivity in that policy, you could also see the negativity in the real sector. You've seen that result from MTN, result from consumer good products has also been negative because the revaluation have also made them incur so much losses in terms of dollars, especially in those that import some of their item into the country. So, and also if you look at the removal of subsidy, also it has had a negative impact because a lot of people that would ordinarily have income that they will invest in the market are not having it because they have to take care of themselves. So there's a positive side and the negative side, but the positivity of this reform to the market has just been to those that have been in the market, those that have suffered so much in the market for a very long time, seems to be smiling now.
All right, I like what you said. And then, there are winners and there are losers. So let's look at the big winners, really. Even on the bourse, there are winners, because you talked about some results that are not as inspiring or encouraging as should be. Talk to us a little bit about, some of these sectors that are smiling, that are doing very well, and the sentiment they have enjoyed so far.
The only sector that really smiled or even brought investors smiles on their face is the banking sector, the financial sector. I think you could see the movement from that place since the president came from a low of at the point SS Bank was selling for 8 naira, UBA was selling for 7 naira, and also GTCO was selling for around I think it was selling for about 30 naira. Not up to maybe 24 naira. Zenith Bank was selling for 22 naira. First Bank was selling for us maybe 10 naira, between 10 to 12 naira. And you've seen the movement in UBA and others. You've seen the movement in those stuff. Fidelity Bank also. What's a penny stock? All of a sudden it's no more a penny stock, is crossing the 10 naira mark. FCMB also have grown. So there's a lot of stocks that have really moved, and these policies have mostly favored the banking sector, the financial stocks. You see an increment of about 150% in a stock like assets. But again, what you must also look at in terms of those what has made it to be sustained is because also the results that came in from this bank, like I said, bad because of the floating of the currency also helped to sustain the result, the kind of result that we are seeing. And the fact that some of these banks paid high interim dividend compared to what they paid some years back, also that is driving investment sentiment to those space. So those are the winners now. I think they are the only big winners. And then you are, okay, of course, the petroleum sector, but we've not seen a sustainment of that move that we thought we move a lot of stocks. And then the only one you see Seplat also is the only one that's all encompassed listed. All of those are just marketing company. And one stock that we thought we could see those movement also would have been Wando. But unfortunately, Wando is planning to delist from the market. We've seen this movement in corn oil also. We've seen that stock move. Eternal oil also, we've seen them move. But again, coming to the fact that after that pronouncement, after this rally, we still see that NNPC is the sole importer of petroleum products that have not helped to sustain that rally. But for the banking sector, the rally has been sustained because of the result. And also when the CBN governor came up and said that one would be the trillion dollar economy and recapitalization of the bank would be the first step towards that, that also triggered the kind of movement you are seeing in the financial sectors.
All right, I like some of the things you've said, but there are those who have talked about the new listings, some of the things that, they have also contributed to what we're seeing in the market. Let me get your thoughts on that before we move on.
New listings are good, but how many new listings have really moved the market, have really excited the market? All we see is listing by introduction, so retail investors are not really participating in all of it. Let me tell you, Perpetual, the beauty about this current rally that we see that I'm excited about it is because it's largely driven by local investors. Over 95% of the rally you've seen here is driven by local investors. I want to talk about local investors, talk about local retail investors, pension fund administrators, local high net investors, and local institutional investors that are driven the type of positivity you have seen in the market. So I'm excited about that.
All right, I understand what you're saying, but there are those who have said that Muktar moved the market, one way or the other. But beyond that now,
Perpetual, Muktar moved the market one way or the other. Like I was discussing with somebody on the exchange, how do you move the market? You listing by introduction, and you have very few people holding that stock, and those few people were not ready to sell. And so what do you expect? You expect that the demand for the stock was high, but the purchasing side was not there. So the price moved. For me, I think that before I begin to count the Muktar movement to have been positivity on the market, it's when I begin to see those numbers. If you look at the numbers that they came in with, the kind of rally that you've seen, there's cause for concern.
All right, let's talk about this now. I think you've already started this conversation. I'm going to ask you now, what segment of investors actually drove the market during this period? Would you say it's the institutional, the retail, or did you even see any significant contribution from the foreign portfolio investors at this time?
No significant contribution by the foreign portfolio investors. The only foreign portfolio investors that we see those contributions were those that were trying to exit the market, but they were not able to exit the market because of the FX issues. So they had to come back to the market, and they are up less than 5%. What we've seen here have been driven largely by local investors, both retail, institutional, and also pension fund administrators.
All right. In a year that is marked by an uninspiring business climate, we have record high inflation, unprecedented depreciation of the Nigerian currency, which is the naira, and several other macroeconomic indicators. Nigerian stock market investors are among the biggest gainers. So we might as well look at other gainers and losers of this reforms. So let's begin with the losers, and then how significant is the effect of these reforms on these other sectors, the real sector you might call it, and for how long can this continue? Without us getting to a breaking point, really?
I think the real sector will definitely come on stream. You see, when there's one positivity in any market, it starts from the financial sector. Any economy when you want to see that an economy wants to grow, it starts from the financial sector. When you see an economy will go through a challenge, it starts from the financial sector. Then from that sector, begin to move to other sectors. So I am of the opinion that we will see those growth in the real sector in the near future, especially in the second quarter of this 2024, when we will see inflation come down, when we'll see stability in the exchange rate, we'll begin to see growth in those sectors. So those sectors are sectors that investors could begin to look at, especially in terms of their price going down, and begin to take a position, just like what happened in the banking sector for a very long time. I think that sector will strive. I think if you look at the budget, you look at infrastructure, you look at the government increment in terms of is it wages to civil servant, and they are still on that. though they say they are giving them an award of 35 naira. That will also increase consumer patronage, especially in the consumer goods sector, the conglomerate. And we expect some big listing to come up during the year 2024. We expect listing like an NMPC to come to the market. We expect Globacom, maybe we might be seeing them in the market, and some other big players of the market. We think that they will be coming into the market. So that could help. But in terms of the real sector, like you rightly pointed out, I think there will be positivity in that sector comes 2024, by and by the budget and what economic policy have been put down by the current administration.
All right, I wanted to put a specific time to it. When? First quarter, second quarter, or third quarter? When exactly?
Babija, you know, I'm not a fan of being put at the spots like this. But again, when I look at the numbers and everything, I think the second quarter looks more realistic.
All right. Well, so far, the equities market has actually weathered the first 6 months jinx, and might be on course for yet another record. But talk to us, are there factors that could derail the market? As it is going now, it's a good one. But are there things that could upset the market?
Of course, any market can be upset by policies, that will be upset by one crisis or the other. It could be upset by one policy or the other. What we're seeing now, we're seeing those drive because of the type of floating of the currency, just for a sudden government think, oh, we have to go back to the managed exchange system. That will also have negative impact on the market. If the economy, the macroeconomic indicator does not improve, especially in the second quarter of the year, that could also have an impact on the market. If we have security challenges, where some of these companies are located, that could also have an impact on the market. But two things, I think, macroeconomy, stability, not getting exchange rate volatility continue, and then macroeconomic instability could have a very negative impact on the market. And when I mean about macroeconomic instability, I'm talking about if the exchange rate continue to go the way it is and inflation continue to go higher, then you could also begin to see some negativity on the market. Like I always say, the stock market has a life of its own, where it can start on its own, but it cannot sustain its life without the economy coming to help them. So the barometer of any economy is always measured by the performance of the stock market. So if you look at that performance, by and by what we see now, it shows that the economy is doing well. But when you go in depth, it shows that the economy is not doing well. So you need to do something about it. And so that's why most of us are saying, you know what, this rally can be sustained. Let me tell you how this rally can be sustained. Perpetual, if by May we create stability in the exchange rate and you begin to attract foreign direct investors, foreign portfolio investors back to the market, that will have a big positive. When inflation numbers comes down and we have that stability in the exchange rate, like I said, that will also affect market positively. But if any of these two continue unabated, then that will have a negative impact on the market.
All right, in closing, for traders and investors, I mean, what's the playbook? What are the things they should be looking out for? What sort of, let's say, sectors should they be, playing or looking at?
Going forward into 2024, you're looking for liquidity, then don't play with the banking sector, the financial sector. You still need to key into that sector. They're going to pay dividends. Normally, they do pay. They're highly liquid. People have a fear about, the trillion recapitalization. The tier one banks are always already a trillion naira company in terms of profit, talk less of capitalization. Shareholders' form has grown to us. So that sector is a sector to look at. The oil and gas sector also shouldn't take your eye off stock like Seplat. It's still a very good stock to be. For the banking sector, the tier one bank and the tier two banks like Fidelity banks and also FCMB are banks that you could also look at. And then if for the consumer goods sector, like I said, it's also if you're a long-time player, you believe in this economy of what they presented and you believe that the budget will work, then you not need to take your eyes off those sectors. Those sectors will be a key driver also in the economy. The oil and gas sector will continue to see those reforms, and those reforms may drive that sector. So for short-term investors, you look at the financial stock. For long-term investor, look at the industrial goods sector, look at the oil and gas sector, and also look at the conglomerate, the consumer goods sector. That could be the game changer in 2024. What we see in the banking sector will begin to repeat itself in the consumer goods sector if we get the stability in the macroeconomy, exchange rate. That will drive the market.
Thank you so much. I know it's something you love to talk about. Thank you so much, Muktar Mohammed, for sharing your thoughts with us on Business Edge today.
My pleasure always, Perpetual. You have a fantastic season. Merry
You
Christmas.
too. Yeah.